Welcome everyone to Charts Focus 1, where we teach how to work hard and trade smart. So if you guys have seen the YouTube title and the YouTube thumbnail, you guys already know what this video is about. And it's about AMC and whether or not the apes are back. So one of the major reasons why I'm looking at this name this week is that this name made it to the CFO Swinger Watch newsletter. And if you guys want to know more details about what that is, take a look at the first link in the description box below. So let's get right into the technical analysis of AMC. So as you guys can see on the screen here, we're looking at the daily time frame, and on the daily time frame, we're looking at a wedge chart pattern or a symmetrical triangle chart pattern, which are both synonymous in my eyes. And these two chart patterns provide two opportunities and two probabilities, one to the long side and one to the short side, which is another reason why I provided two different entries, one for long and one for short for my members. And obviously today, the long entry triggered over $13.20. And I also told my members last night in the private CFO Discord, which is only accessible if you are subscribed to CFO Swinger Watch newsletter, that I will be looking at specifically the 13 strike calls that expire this week, July 1st. And today we entered them slightly underneath $13, which is a little bit risky, but it paid off as I saw more buying coming in than selling, and for the fact that AMC had a stronger bounce than any other name that I was looking at specifically in the newsletter, right? So with this AMC run up, our contracts hit maximum around 270%, but from the point that we've entered, it hit around maximum 230%. So with AMC here, it was originally a swing, which is why I'm personally swinging it right now, and I expect more of a run tomorrow. But here's the thing, all right? So if you go deeper into the technical analysis, what I wanted today, okay, especially for the volume, was that I wanted the volume to be a lot larger compared to Friday. And also, that's one of the major reasons why I was looking to put this name in the CFO Swinger Watch newsletter over the weekend, because I loved the huge jump in volume last Friday, and for the fact that we're just kind of in the middle of nowhere within this chart pattern. So if it broke either way, I still would have played either, probabilities, right, to the long side or to the short side. And so obviously today, it was a great win for the bulls. And that's the reason why we got long as well. So with this volume in mind, the one major thing that I wanted to see today was a bigger volume than last Friday that accompanied this breakout, right? So if we had larger volume than Friday, this would have corroborated today's breakout, but we didn't get that. So I'm going to be a little bit more cautious, and I'll be looking to take profits faster tomorrow, especially if we get to around $15, right? But like I said, this is a meme stock, right? It's a meme stock. So that means retail traders create a lot of volatility. And when there's a trend break or a trend reversal, these retail traders like us tend to move that trend hugely, right? I mean, it has an impulsive initial run up. So I'm expecting either a gap up tomorrow, right? Or we just continue to the upside. Now, the reason why I say that there's a potential for a gap up is that, well, if we take a look at the previous data, right? So if you look at this area right here, do you see how we had a similar run up, right, on May 27th? And then we kind of closed near that level of resistance around 14.50-ish. And the very next day, we gapped up and then completely had a gap fill or a gap and crap type of day. So, there's a huge possibility that we can gap up over $15 and maybe, just maybe, okay, hit this resistance level of $16 and possibly make a double top. Right, so here is our first top here, and then here could be our potential second top tomorrow, right? So, this is how I basically kind of do a good risk assessment by looking forward Okay, and the reason why I look forward is because I have the previous past data, okay, to analyze, right? And this is what you guys should be doing as well, right? You're looking at previous data to make risk assessments to have a better probability of, taking a profits or having the next great trade that you can potentially have. So, as a swing trader, I'm constantly looking for, either stop losses or profit targets or potential, whatever it may be, potential new entries that I might need to take in order to be in profit, right? So it's all about risk management and risk assessment. Okay, so with a meme stock like AMC, you just can't get emotional. Sure, these amazing run-ups on on these meme stocks are incredible. I can't deny that. But with such a good run-up on meme stocks, and especially since they have been seeing some very big pressure. If you take a look at the weekly time frame, AMC is down a lot, just like any other meme stock. So make sure you guys know what you're doing first, right? Know what you're doing, and make sure you guys are always looking for risk management and risk assessment, right? So like I said, if you're looking to trade tomorrow for AMC, make sure you're looking out for a potential hold of that 14.50-ish resistance level so that it can turn into new support. And if that turns into new support, then we will charge right through $15 and head towards that $16 resistance level. But if you decide to gap up and try to follow what happened in the past in late May, we will gap up, reject around $16 and potentially make a double top. And from that point forward, we'll just keep on falling back down and come back into this wedge chart pattern and most likely continue to fall and break below this wedge chart pattern, which will also give us another opportunity to short under $11.50. Okay. All right. So that's all I have for you all. Have a great rest of your night and good luck trading tomorrow.